Good afternoon, traders. Today is November the 12th, 2010. Thank God it's Friday. If you've been making money as a futures trader, you've been actually trying to trade this early morning market between 12 a.m. and 6 a.m. in the morning. That's where most of the volatility and the action's been when the London markets are open. I'm looking at an ES chart right here, and things are looking pretty bearish for once. We did get some selling overnight. Now this is a daily time frame, and as you can see, the 20-day moving average is at 1192.40, which is this green line right here that is moving up. We have a descending 5-day moving average, and we just got a sell signal with the PPS indicator, and the on-balance volume just put in a lower high. So right now what we're going to look for to stay bearish is we need to hold below this 1216 level, which was the high we put in back in late April. If we could hold below that, we're going to look to start making a move back down to the post flash crash high around this 1174 level. I'm going to show you a few stocks that I traded today. I traded Cisco. I actually just sold the rest of my position. It might head back up to 2046. There's a good possibility, but I made about 8 cents off of it. I got long here at 30, and then I sold it at 38. Consolidated, we have a level at 35, so that's going to be important that we hold above it. As long as we're above it, I see no reason why we can't get back up to 2046. I'm going to switch to RIM. I did not trade RIM this morning because I wasn't watching it, unfortunately, but look what it did. It right off the open, it opened up at 58.49. It pulled back to 58.30. So if you would have bought right at the open, you risked 19 cents, and then it pulled all the way up to 61.39. We call that a grade A setup. But if you guys are wondering why RIM had such a major move, and you guys need to understand that moving averages are very strong. You see the 200-day moving average, and we're busting through it right here. Well, the 200-day moving average is at 59.53. Now I'm going to show you on the intraday time frame, RIM at 59.53. This is the 1-minute chart, and 59.53 is this line, which are right here. Right after we got over this, the buying continued. So I'm going to explain to you something about these algorithms and these institutional traders. They have what it's called is a buy stop. That means if it goes over a moving average, they're going to put a certain amount of liquidity into this equity, whether it's a stock or futures, whether it's over or under a moving average. That's what happened in this case scenario. You see, the first 15 minutes, which are usually the most active volume, didn't come through until after we broke above the key 59.53 level, and then we had this amazing up move. Just keep RIM on the radar. Continues to stay strong. Looks like we had that moving average break right here. We just been gliding down a little bit. Also LVS. This is the one that I traded this morning. I've been trading this frequently. I should be trading it to the short side right now, but as you guys know, if you follow my trading, my intraday trades, that I'm a 60% contrarian trader, 40% trend trader, only when it comes to day trading. When it comes to swing trading, I very seldomly, probably only 20% of the time, go in the opposite way of the moving averages and the market trend overall. So my trade that I took on LVS was this one right here, and my total position was 500 shares. I saw we put in this low right here, so if you guys know my style, when we came down here, we started selling. I took my first long at 76, which was right about right here, 76. Long 300. and my stop was right about here at 60. So I said to myself, if we could bounce off this low, I get really bullish, then we get back above our key critical support level at 49.82. That's where I add my other 200 shares. When I added them, my average cost was 49.80 for 500 share lots. 49.80, it ran all the way up to 50.20. Now I didn't sell it all the way up there. I sold it at 50.10, but it was a 30-cent profit, so that's a $150 trade in a matter of 3 minutes. These are the kind of setups we look for, guys. So keep LVS on your radar. Right now we're in a downtrend. If the market continues to be weak, I am going to look to short this stock. I believe it could definitely go lower. And if you want to look at something else, I'll just point out the market one more time for you. And I think that we could get back down to this 11.93 today. If the buyers don't step in soon, there could be some heavy selling right before the big institutional players take lunch. You guys also know that I'm short-term bearish on the dollar right now. As long as we hold above this 20-day moving average at 77.48 and still keep this ascending 5-day moving average, I'm still bullish. Remember, 78 is the psychological level. That's where we had yesterday's low was at 78, and we opened at 78.02. That's not just a coincidence. That's how these algorithms are programmed to trade these indexes and equities. So as you can see, look, I want you, when I do these videos, I really hope you guys mark these levels on your charts, because I know you can see that they play out. 77.84. If you would have had this level on the DX, which I pointed out 3 days ago, you could have went from 77.84, and we're currently trading at 78.10. That's a decent trade right there. Now, if the dollar continues to hold over the 78 level, we could look for another bounce going into the afternoon session, and that would then most likely lead the market down. Looking at crude oil now. Yes, this is really ecstatic for me. I want to see crude oil go down. I don't want to see it go to 90, but there's a good chance that it still will. This is probably just some minor profit taking. It usually trades in correlation with the market, so if the market pulls back a little bit, there's a likely chance that crude will do the same. 85.38 is our major support level, which we're rallying above it now. If I traded futures, I would be getting long right here, and for a move at least up to 85.61, potentially get back up to this 85.80 level. But as long as we hold over 85.38, guys, mark this level on your chart. Keep this as a long. Looking at the gold futures right here, we have a short-term trendline break, which occurred right at this 1403 level that we put in yesterday, and we've sold off ever since then. That's really irrelevant when you see that we're at a major support level right here. 1372 is our support level. Right when we hit that, we bounced right off of it. I'm sure the miners probably got it bounced too. So if we hold 1372, we're going to still look to put some money in the gold markets. And for when I'm telling you this stuff, I'm speaking of a short-term 1 to 3 day time frame. I'm not speaking long-term. This market is too indecisive right now for me to make any long-term calls on the market. So pay attention. GDX, like I said, it got a bounce. If you would have had that support level on the gold futures, you could have caught this GDX if you trade stocks. And here goes the market, guys, dripping lower towards this 1193 level, which was yesterday's low. We put it in overnight at 3 a.m. this morning. And look at the, like I said, look at the volume that's been taking place. We had a 20-point sell-off in the futures market after hours. It's pretty intense. You guys enjoy the rest. I'll talk to you this weekend, but enjoy the rest of the trading day. I hope you make large profits.